Good morning everyone, welcome to Morning Markets. Today a couple of things to discuss. We mentioned at the beginning of the week the ZEW economic sentiment data that would come out from Germany. This information came out yesterday. It was disappointing and probably more disappointing than we would have expected. It just goes to show how sentiment around the coronavirus is impacting the German economy and German sentiment. To me, what this suggests is that we're probably going to see weaker GDP going forward from Germany, and even the potential that Germany does flirt with recession as we think about the challenges that economy faces with its intertwined nature of global trade. Also, we touched on Apple yesterday. We've seen other companies talk about and discuss overnight some of the challenges with the supply chain. You've probably seen in the news reports the struggle that Jaguar Land Rover has, I think, with getting key fobs out of China. Apparently they're bringing those across in suitcases to continue their manufacture. That speaks to the challenges and the interconnectedness of global supply chains. The positive thing to discuss maybe around the coronavirus is that we did see a number of provinces in China report 0 new cases, which is the first time that we've seen that. And we also did see a number of people, 1,800 I think it was, discharged from hospital. Again, a positive as we continue to work through the challenges that this is presenting. Additionally, overnight we did hear that there would be some additional measures taken by the Chinese government to support the domestic economy, specifically some information around that they may look to merge some of the airlines, which obviously, given that people aren't travelling, is having a real impact on those businesses. That's led to a more positive tone in markets this morning. In contrast to the German data, I think the other important thing to mention is the strong UK numbers that we saw yesterday, specifically around unemployment and job creation, where we saw a number that was ahead of expectations. But more importantly, where the unemployment rate has now gone to, I think it reported yesterday at 3.8%. That's at a 40-year low. So again, just contrasting that with what we're seeing from Europe and the challenges there. The UK, despite everything that we've talked around Brexit, has shown a slightly better performance in the fourth quarter of 19, which puts us into a good place on which to build. A couple of weeks ago, we mentioned the Bank of England and the sort of the 50-50 chance of a rate cut. Obviously, they didn't move. What have we seen since then? Well, we had our fourth quarter GDP numbers, slightly better than expectations. We've had the employment data yesterday, again, better than expectations. That potentially helps out the Bank of England and suggests that maybe an interest rate cut is less likely for the UK. I think the contrast also helps to explain just the strength of sterling and the weakness of the euro that we've seen over the course of the year to date. That's it from today. Please join us again tomorrow. Thank you.